I'm Matt Bishar with REIT.com here in San Diego for REIT World 2012. Joining me for this edition of CEO Spotlight is Hamid Moghadam, Chairman and Co-CEO of Prologis. Hamid, welcome.
Thank you.
Your company is expecting strong rent and occupancy growth in the coming years. How much growth do you expect, and what are the drivers behind this?
Well, Matt, as you know, the industrial business has not had the best years in the last couple of years, so we're climbing our way back from the basement. And with good demand and virtually no construction in the market, we're seeing a very strong recovery in rents and occupancy, particularly on the larger spaces. In fact, in large buildings north of 250,000 feet, we're over 98% leased. And we're pushing rents in that sector. So really the opportunity for us is to get the smaller space tenant up. And we're operating at about 90% occupancy in buildings lower than 100,000 feet. And we think with the recovery in the general economy and the housing market in particular, we'll have a good run of that in the U.S. in the coming quarters. And
e-commerce is playing an increasingly large role in the global economy. How is this impacting the supply chain?
Well, you know, one of the reasons we're doing so well with bigger buildings is e-commerce, because those users require large floor plates, and they've been gravitating towards those existing spec buildings that were around following the downturn. And we're basically out of space in that sector. So that demand is going to translate into new built-to-suit opportunities for our company. And I think that that trend has legs. I think we're at the very early stages of the supply chain building out. And the locations where these e-commerce users are going is changing because of the tax advantages. They used to stay out of the population areas. Now, because of the harmonization of taxes, there's no incentive for them to avoid the large markets. So they're actually playing right into our playbook by coming into these large markets like LA and New Jersey and the Bay Area.
You can't turn on the news without hearing about the struggles in Europe, but your portfolio has done fairly well there. What's contributed to your strength?
Well, you know, people don't lease industrial real estate because they want to. They lease it because they have to. And it's a real advantage to have efficient logistics infrastructure. It's a way of taking costs out of the system. So when companies are in a low growth or no growth environment, flat top lines, the only way they can work on their bottom lines is to take costs out of the supply chain. And logistics and buildings, bigger buildings, modern buildings, enable them to do that. So the companies with good balance sheets and the financial horsepower to take advantage of this environment are committing to new space, and that's driving demand for our product. We're actually north of 92% leased in Europe, and we've been able to increase occupancies by about 300 basis points in the last couple of years.
And it sounds like overall you have a fairly positive view on the sector, but what is your outlook overall for industrial sector?
Well, you know, we've had a difficult couple of years as I started out. So on a relative basis, we're doing really well. And just if we're able to get the rents and occupancies back to where we had them in the early part of the 2000s, now that's fully 15 years ago, I think will create a lot of value for our shareholders. So we're optimistic that with limited supply, that's key, limited construction, and even a modest recovery in demand, we'll have a very good environment for our business going forward.
And lastly, we're now a full year out from the merger between A&B and Prologis, which by all accounts went about as smoothly as a merger of that size could go. But with the advantage of hindsight, looking back, is there anything that you would have done differently or changed?
I think it's been a tremendous combination. If anything, we should have done it sooner. And it made all kinds of strategic sense. And my partnership with Walt has been fabulous. And I think that contributed to the merger going as well as it has.
Hamid, thank you so much for joining us.
Thank you.
For more REIT news and analysis, be sure to visit REIT.com.